Welcome everyone to Econ to Action, our new economic podcast where we take a look at how different market sectors are navigating our unique economic environment. My name is Josee. I'm an economic analyst at Experian, and I'll be your host. Last month, we zeroed in on credit unions and the challenge of deposit flight. I hope you were able to listen to that one. If not, I would really encourage everyone to go back, but today I'm excited to take a dive in another direction. We're talking fintechs today, and our guest is Neil Conway, a senior client executive on the consumer fintech team at Experian. Welcome, Neil. Thanks for being here.
Thank you so much for having me, Josee. Really excited for the time and enjoyed last month's and learned a little bit about credit unions. Thanks.
Yeah, definitely. So, Neil, tell me a little bit about your background and the types of clients that you primarily work with.
Sure. So my background here at Experian has been both on the consumer side, which is individuals, right? Consumer data. And then prior to that, I was on the commercial side or business data. Think of the same kind of consumer profile, but inverse for a business and everything. So it has given me a unique perspective for both sides of a similar coin, both within fintech, which is very exciting. I like the creativity and I like the speed at which it works. Prior to my work at Experian, I worked in healthcare software at a couple different spots, and right out of school, I actually did some time as a investment banker, where got exposure to some really smart people, and it was fun to learn about that environment. And coming into a full circle, there's a lot of that realm that's coming into fintechs now, so very fun.
So you've been in this space for a while now, and you've been able to see firsthand the differences between more traditional FIs and fintechs. Last month, we discussed the challenges facing credit unions, but what specific challenges are fintechs having to navigate as we're facing the likelihood of incoming slower economic growth? Has funding been more of a challenge in this environment?
Yeah, Josee, absolutely it has. And I think there's a couple different concerns. And so we take a step back, there's general economic concerns of what do we really have here? We have mixed numbers that indicate a strong hiring and new job growth. We also have high demand on consumer spending. Inflation seems to be curving. But one of the big impacts of that is the upcoming student loan unpausing. And we don't really know how many people are going to be impacted in a material way in their ability to pay in their monthly cash flow. We do know a lot of people have student loans, and adding another $200, $300, $500 to monthly expenditures could have a pretty material effect. So I'm hearing a lot of conversations about that. But that really kind of moves into a funding question as well, which was the second part of your question. And absolutely, funding is a concern, although it's in a different way with fintechs. I know when you talked to Chris on the last one, you were talking about deposits and how important that is with credit unions. Fintechs work a little bit differently.
Gotcha. Okay. Could you elaborate a bit on that? Or how is it that most fintechs make money?
Yeah, absolutely. So fintechs are kind of at the front end. And by that, I mean they're really using technology and efficiency to make a decision quickly and with good credit standards and low risk, maximizing the whole time in the cycle that a consumer is on your site. The word frictionless is used quite often within the fintech space. So they want the consumer to have a very smooth and frictionless transaction. So if we think of all the different parts of kind of how a loan goes, and maybe we'll use mortgage because that's easy to go, but you, the consumer, borrow money on a mortgage and you go through that application and everything and you're approved. And in the background, that paper, after it's been originated, is changing hands a lot in the background. And many other buyers of your future cash flow are interested in your ability to pay, and your experience as a consumer is consistent. You are still paying your monthly payment to the same place. So when it comes to how fintechs make money, they're making it at the front end of that, at the origination. They don't originate and then usually hold that loan on their books for very long. So they need to have a place to offload it.
I want to circle back to those funding challenges. So, the Federal Reserve did extend their rate hike path projections at the last Fed meeting, stating the potential for 2 more rate hikes this year. And I imagine that could signal that these funding issues may continue to get worse. Neil, are more fintechs looking to get a bank charter or to partner with or acquire banks to access deposits?
Yeah, so the answer to that, you being from the economic discipline, is always it depends, right? The
Mm-hmm.
fintechs that have many product diversification, meaning more than just a personal loan or a credit card, there are several in the market that do things like auto and mortgage and student loan, as well as credit card and others. Those, it probably makes sense for them to look at getting a bank charter and going through that exercise. There's a lot of regulatory oversight, as you know, and it's a materially different skill set than a lot of the fintech folks have. Typically, you see in fintechs a skill set that is technology based and then very much credit underwriting and how do we do this quicker and better. Running a day-to-day on a more traditional FI and the obligations that are needed to have a bank charter are pretty high. And so we don't see as much of that in the market anymore. But we are absolutely seeing a partnership where fintechs need to have a nationally chartered bank where they can originate across all states and have that paperwork be on the bank's paper and not the fintech.
So considering everything that you've already mentioned, what sorts of tools are fintechs using to combat their unique challenges, or on the flip side, to capitalize on their unique advantages?
So there is a common theme, as you might imagine. Fintechs, as we were kind of talking about earlier, they pride themselves on being nimble and quick. And so the technology they leverage, the tech in fintech, is helping to facilitate that. And that usually takes the form of a couple different tools. There's business intelligence tool that helps visualize your data and what is the story the data is telling. That typically can be like a Power BI, or there's many other like product names out there. Experian has some of them, but most fintechs have a way of saying, what is the data telling us? Are things getting better? Are they getting worse? And what do we need to do? Then from there, they take those kind of observations and they move into an analytic environment. And that analytic environment allows them to test some changes they would either make to their underwriting or the model or things and say, how would this affect us? And should we implement it? And after they go through that exercise, then it goes to actually leveraging technology to implement it quickly. And that whole cycle can take as few as a couple days if they have the proper infrastructure. And to contrast that with what that would be like at a more traditional FI, that can be a months or a quarters type of exercise to be able to see something and want to make a change and not be able to test and approve, get it through all the different bureaucratic levels, and then implement it. So fintechs are always trying to make that more efficient and quick, start to finish. That's what allows them to compete as well as they do in the marketplace. Does that make sense?
Sure, yes, it does. And, when our current economic environment is moving and changing so quickly, delinquencies are rising, confidence is historically low, inflation has been persistent. Those quick advantages and those tools that fintechs are using and that are unique to them are crucial. I think we're coming up on our time, but thank you so much for chatting today, Neil. I know it was incredibly insightful and I learned a ton.
Well, thank you, Josee. I really appreciate you inviting me on. These are great series and a great opportunity to just continue to be curious. And as Ted Lasso says, be curious, not judgmental.
That's great. So I think it's also time for our monthly economic stat for the audience. In July's reading from the University of Michigan's Consumer Sentiment Survey, confidence in the economy rose 13% over the June level, reaching its highest number since September of 2021. Now, that data is preliminary, but it shows that consumer feelings toward the economy continue to move in the right direction, especially since the index reached historic lows about a year ago now. This renewed confidence, although it remains historically low, comes as inflation cooled considerably on the month and the labor market remained very stable. Thanks again, everyone, for tuning into Econ to Action, and please check back in next month for our next episode where we'll explore yet another market. Thanks again. Bye.